Senegal has officially entered a new era of economic transformation with its first ever local oil refining, a groundbreaking achievement that marks a significant milestone in the country's energy sector. For years, Senegal relied entirely on imported refined petroleum products, but that is now changing with the African Refinery Company, SAR, in Mbao, near the capital Dakar, processing an astonishing 650,000 barrels of crude oil from the Sangomar field. This breakthrough has already yielded 90,000 metric tons of fuel, including diesel, kerosene, and butane, a development that signals not just a shift in energy independence, but also the potential for regional economic cooperation. Before we dive deeper into today's update, take a moment to like, share, and subscribe to the channel. Your support is key to helping us grow and reach more viewers like you. Don't forget to hit the notification bell so you never miss out on exciting updates. With Senegal taking this bold step, a critical question emerges. What could this mean for collaboration between Senegal and Ghana, two rising players in the West African oil industry? To grasp the magnitude of this achievement, it's essential to look back at how Senegal's oil journey began. The SAR refinery was established in 1961, but for decades it only processed imported crude. That all changed in June when Senegal officially began oil production from the Sangomar field, operated by Australian company Woodside Energy. What followed was nothing short of remarkable. 16.9 million barrels of crude oil produced in just a few months, far exceeding the initial projection of 11.7 million barrels. This unexpected success has positioned Senegal as a new player in the global oil industry, proving that the country is capable of not just producing, but also refining its own resources. For a nation that has long depended on foreign refined petroleum products, this is a game changer. But beyond national pride, this development has far-reaching implications for Senegal's economy, potentially generating billions of dollars in revenue while significantly reducing dependence on foreign imports. The significance of this milestone extends beyond oil production. It coincides with the launch of Senegal's gas production in a shared field with Mauritania, a move that further cements its position as an emerging energy hub in West Africa. But while Senegal's oil production levels remain far below those of major producers like Nigeria, the country's refining capabilities introduce a strategic advantage. Now, the real opportunity lies in leveraging this success to foster collaboration with Ghana, another key player in the West African oil sector. Ghana entered the oil industry earlier, commencing large-scale production from the Jubilee field in 2010. Over the past decade, Ghana has navigated numerous challenges, from fluctuating global oil prices to regulatory obstacles and inefficiencies in refining at the Tema Oil Refinery, TOR. Despite these hurdles, Ghana's oil industry remains a crucial pillar of the economy, contributing significantly to GDP growth and job creation. But what if Ghana and Senegal pooled their expertise, resources, and infrastructure to strengthen their positions in the global energy market? The possibilities are endless. One of the most immediate areas for collaboration is refining and processing. Ghana's Tema Oil Refinery has faced persistent challenges, including financial constraints and operational inefficiencies, often relying on imported crude due to equipment failures. Senegal's successful launch of local refining presents a golden opportunity for both nations. By working together, Ghana could tap into Senegal's refining capabilities to stabilize its supply chain, while Senegal could benefit from Ghana's longer experience in upstream oil production. Such a partnership would ensure a more reliable supply of petroleum products for both nations, reducing their dependence on foreign refiners while fostering regional self-sufficiency. Beyond refining, logistics and infrastructure offer another avenue for cooperation. Both countries could invest in shared storage and distribution networks to optimize fuel supply chains across West Africa. The creation of a regional pipeline or an integrated maritime transport system would significantly cut transportation costs and enhance energy security. A well-planned energy corridor between Ghana and Senegal could revolutionize fuel distribution in the region, eliminating costly inefficiencies while ensuring stable fuel prices for consumers. In an era where energy security is increasingly critical, such initiatives could provide both nations with a competitive edge, enabling them to exert greater influence over the regional oil market. Technology and knowledge transfer is another critical aspect of collaboration. While Senegal's energy sector is still in its infancy, Ghana has accumulated years of experience navigating the complexities of oil exploration and production. By sharing expertise, both nations could accelerate efficiency improvements in oil extraction, refining, and environmental sustainability. Engineers, geologists, and refining specialists from both countries could engage in exchange programs, enhancing local expertise and reducing reliance on expensive foreign consultants. A joint initiative to train young professionals in petroleum engineering and refinery operations could create a skilled workforce capable of sustaining the industry's growth for generations to come. Exploration is another area ripe for collaboration. Both nations have ambitious offshore exploration projects, but working together could attract larger investments from multinational energy corporations. A joint bidding strategy for offshore oil blocks could significantly enhance their negotiating power, securing better terms for resource exploitation. In an industry where competition for investment is fierce, the ability to present a united front could be a game changer. This approach would not only maximize revenue potential, but also mitigate risks associated with exploration and production. With global energy markets experiencing volatility, strategic alliances between resource-rich nations can provide much-needed stability and predictability. Trade and export opportunities between Ghana and Senegal present another avenue for economic growth. With two refining hubs, Tema in Ghana and Mbao in Senegal, West Africa could experience a surge in locally refined petroleum products, reducing reliance on expensive imports from Europe and Asia. By establishing preferential trade agreements, Ghana and Senegal could ensure a steady supply of fuel at competitive prices, benefiting not just their economies, but also neighboring nations. Such a move could position West Africa as a net exporter of refined petroleum products, challenging traditional supply chains and enhancing the region's bargaining power in global energy markets. Regulatory alignment is another crucial consideration. Currently, differences in taxation, environmental policies, and investment regulations create obstacles for cross-border oil and gas ventures. Harmonizing these policies could create a more attractive investment climate, drawing global energy players while ensuring that local interests are protected. A unified regulatory framework could also facilitate joint infrastructure projects, streamlining approvals and reducing bureaucratic delays. Additionally, coordinated environmental regulations could ensure that oil production and refining activities adhere to the highest sustainability standards, mitigating the risk of ecological degradation. Looking beyond traditional fossil fuels, Ghana and Senegal could also collaborate on energy transition strategies. As the world shifts towards cleaner energy sources, both nations must prepare for the inevitable decline in global oil demand. Investing in gas-to-power projects, carbon capture technology, and renewable energy initiatives could help future-proof their economies while maximizing the benefits of their petroleum resources. A joint approach to securing funding for cleaner energy projects could accelerate the transition to a more sustainable energy sector, ensuring long-term economic resilience. Ultimately, Senegal's entry into the refining sector is more than just a national milestone. It is a pivotal moment for the entire region. The potential for collaboration with Ghana and other West African nations could reshape the continent's energy landscape, fostering economic resilience and regional self-sufficiency. While challenges remain, the opportunities for mutual growth are immense. Strategic partnerships, innovative policies, and a shared vision for the future could propel Ghana and Senegal into the ranks of leading energy players. The question now is not if, but how these two nations will seize the moment. Will they chart separate paths, or will they come together to create a stronger, more influential energy bloc? One thing is certain. This is just the beginning of a transformative journey, and the world is watching as West Africa rises to claim its place in the global energy market.
If today is your first time watching this channel or you are returning to this channel for the exciting content, please subscribe to the channel for more educative and developmental projects across Ghana and Africa as a whole. Do you want to know about the state of a project in Africa? Then make sure to like and comment the name of the project you would like us to talk about and its current state.